What's going on, believers? It's your boy Rebalance with another weekly review and outlook. The bipolar weather here in the Midwest has got my allergies acting up, so I do want to apologize for my voice if it's not as smooth as usual. We all know that this is not financial advice and that this is strictly just education and entertainment based off my time and experience with these markets. Now, as always, I like to start off with the economic calendar pulled up. I have 3 weeks of it pulled up here. You can look at the top, April 16th to May 5th, and we'll get into the reason for that. But before I do, just want to scroll through this, right, and just do a little look back on what transpired this past week. So on Monday, we had high impact. Tuesday, nothing. Wednesday, nothing. Thursday, medium and high impact. And then Friday, we had a couple high impacts. Next week, well, not next week, this week, that's about to start later on this evening. We have nothing Monday, Tuesday, medium and high impact, Wednesday, a couple medium impacts, Thursday, high and medium impact, and then Friday, also medium and high impact. Now, keeping in mind that this upcoming Friday will be the last trading day of the month. So that following week, we do begin a new monthly candle as well as a new weekly candle when that next week of trading begins. And the reason why I have 3 weeks of the calendar up is because I can't talk about next week without mentioning what's following concerning the interest rate decision by the Federal Reserve. So that'll be coming up on Wednesday in the afternoon. And typically before something like this, market is very choppy, held in consolidation, things like that. So that's just, more of a thought that I want to keep in mind as I'm framing out, my analysis and things like that for, this upcoming week. And so the CPI and PPI numbers, as well as a couple other like inflationary indicators that have released and will be releasing also this upcoming week. But the Fed chair, Jerome Powell, has said that the data that they see is what determines their decisions. So it'll be interesting to see what they decide to do and then what they basically tell the public as the reasons for them making that decision, right? And I know that I've mentioned as well before that to me, the news is mostly smoke and mirrors. And that's just because, again, anything can be explained in a way to make it make sense as far as, the things that happen in this market. And so I just try to, pay attention to the main thing that I've been taught from my mentor, Inner Circle Trader, is to just focus on the liquidity, right? Because at the end of the day, I would subscribe to the idea that these markets weren't created to allow for individuals to achieve financial freedom. Believe they were designed to basically capture liquidity from anybody willing to, participate. That just to me makes a lot more sense. Call it sinister, call it whatever. I'm just a realist, very optimistic person, but definitely also a realist. So moving on to the charts. So dollar chart here, we're looking at the daily on the left, weekly on the right. And from last week, I was expecting lower prices in the dollar. And my last lines of defense for that were first, this once pink, now brown rectangle, which is just a representation of this inefficiency between this candle's low here and this candle's high here. And the March low was another level I mentioned, as well as this opening price of this up close candle, which you look to the right, 102.095 is that price level. So Monday's trading, we ended up tapping into this volume imbalance down here, and then we rallied up to that Well, up and through that opening price, right? But if you look at the close in the top left, right up here, we closed right at that opening price of the up close candle. The following day, we did open up higher with a slight gap, but quickly rejected back into the inefficiency. And then every day, the rest of the week, trade up into that opening price and then reject it back into the inefficiency. Over here on the right side, we see on a weekly chart that we have 5 consecutive down close weeks. This low is the same blue line here. Let me actually just get this so that we can see it over here. So put it up on a weekly as well. So that is that low right there. So we trade through that low and we reject it higher, and we had a week of consolidation essentially. So my bias, just going into my outlook already, is still going to be bearish for the dollar. Given what I just walked through with the economic calendar, though, please understand that that idea of smoke and mirrors and liquidity is the main objective here, right? There's liquidity on both sides of this candle here on the weekly chart. If you can see, we've closed inside of that range, so we didn't take out the high or the low. So while we did take out sell side last week, here, ultimately, we have not yet on the weekly chart taken out any buy side in a while. You know, as you can see, none of these weeks took out the previous week's high, but we continue to take out the previous week's low or from 2 weeks before. And so the high and the low of this past week are going to be significant. So I'll just go ahead and, right, place those levels on the chart. But these levels are going to be significant because depending on how price trades, when it gets to these levels, will be a nice indication of what's to happen next, right? Whether it be it trades higher and it gives clues of continuation, I would be looking for this high, or if it trades through here and it shows, you know, a rejection, then I would be looking for this low. And then vice versa, right? If it trades to this low, shows signs of continuation, then I'm looking for these lows, which are now relatively equal. But if it trades down here and shows reversal or rejection signs, then I'd be looking for this high, right? And so that's the beauty of once you have something like this, like an inside bar, price has to, at some point, take out the high or the low here. It could consolidate within its range for sure, for, you know, days, weeks, for however long before it actually ever does that. But it's just something to keep in mind, right? And so that's the dollar chart for you. Quick, you know, review and outlook. Now going into Dow Jones, which was what I said was going to be my focus last week. And so we'll walk through that really quick. I did have some areas that were marked up over here that were a representation of some inefficiencies on the hourly and the 15-minute chart. And the market already opened, and I was saying that and I would like to see price trade down to those levels. There was a level underneath. It was right at 33,998, which is where I had a blue horizontal line that said TP. I was mentioning that means for, you know, take partials or take profit. And that if I was to see some sort of a entry signal, I would be willing to take a trade down to that level and then, you know, move to the sidelines and wait to see if it showed any type of signs of wanting to go higher, because I was bearish dollar, bullish on, you know, foreign currency and U.S. stock indices and gold. But so just right quick review. So we opened with a gap higher, right? Then we immediately filled in that gap with a wick. Then we put some bodies in there. Consolidation. We trade lower, hit that level, which I had. But there was no certainty as far as where I thought as low as it could go. This being Friday's low right here from the past week. would have been an area that I would have been watching had it had enough energy to get down there. As you can see, it did not. On the hourly here, we got a nice engulfing candle, a nice bullish engulfing candle. And then from that, we ultimately consolidate on the weekly opening price. And then going into Tuesday, we punch above that previous Friday's high. No close on the hourly, reject lower. We end up taking out Monday's low, retrace from that back to the weekly opening. Reject, well, this acts as resistance, right? The weekly opening acted as resistance. Send prices lower. Basically, we trade below the bodies of all of these candles, but not completely through the lows. Consolidation, a lot of choppiness in here on Thursday. Well, Wednesday, excuse me. Thursday, lower again, finally clearing out all of these lows as well as that previous Friday's low. Consolidated on that level as well as that March high for a few hours. And then Thursday, there was news here. We got a nice rally, little consolidation at the top before running lower. And I believe taking out this low. So that low is 33802. This low is 33803. So did not take out that low actually. So this low is still intact. So Thursday ended up printing the low of the week, right? But like I said, we trade lower. After that consolidation, we retrace. Another consolidation, right? Pretty much working that March high, if you ask me, and the sell side that was below Friday's low for the end of the week. Ultimately, that's all that I can pretty much see that was going on. This type of week here, where it's very volatile but doesn't really go anywhere, is considered seek and destroy because there are a lot of traders who will come into the marketplace and want to catch home run moves, want to catch the breakout move that goes to unlimited, basically. You know what I'm saying? Like just that dopamine effect of just wanting to have something to show off, essentially. But the conditions in the marketplace right now are not for something like that. Maybe back in 2020, 2021, but right now, at least for this year, that's not the way to be. In my opinion, that's not the way to be um trying to take advantage of these marketplaces. Smaller, more precise, more humble moves, I say, are what I'm trying to, wrap my head around, to be honest, because I was born into these markets during a time where moves like that were happening frequently. But the world has changed, right? Things don't always last forever. And a lot of us are experiencing that who were born into this market around the time that those sustained moves were happening. And some of us, I know myself, was disappointed at first, but you have to just accept what it is, right? It is what it is. I love that saying, and just kind of, adapt and try to make the most of the opportunities that are, provided. But so bringing up the daily chart, this is also what you would see, right? In seek and destroy conditions. For sure, Monday and Tuesday, just when you have small bodies and huge wicks, that just means that there's a lot of volatility, a lot of people chasing this price lower before it whipped back up on them. And then a lot of people chasing it higher before it ran back down here. So then they start chasing it lower and it whipped back up on them. And then right down here again, maybe people were and here as well, was back up on them. Right down here again, was back up on them. So these type of characteristics, and just going back into how I mentioned, 8% a month being something that is a nice goal in my mind, and that wouldn't require trading every day, wouldn't require trading more than possibly a couple times a month, right? And so, provided that there was a lot of choppiness, like you see on Wednesday, so that was my primary focus. But and even before Wednesday, and here as you can see, that same idea, right, of there being large wicks and small bodies. These are pretty large wicks on every candle. So by the time Monday was done trading, I had shifted my attention to gold because gold was, in my mind, if the indices are going to be choppy, gold may have a chance to not be so choppy, right? And so I shifted my attention to gold. And so I'll pull up the gold chart here in a second. But another thing I do want to just bring back up is it's not necessary to predict the close. So understanding that that's a skill set that is 100% not necessary to be able to take advantage of these fluctuations intraday and as well as on the daily chart. Although I did mention that this is something that I would personally like to avoid. I know there are many, speculators around the world who love to scalp and are 100% fine with catching these types of moves, on a given day because they've developed the discipline and the patience to, right, wait for an opportunity that makes sense and then to just be able to know, okay, this is enough, or this is all I need for today, and I'll close my charts and then I'll go about my day, right? But so now going into gold, we see over here on the right, the daily, right, and hourly on the left. So, like I said, on Monday, well, after Monday, I pretty much shifted my attention to gold. See on Tuesday, characteristics of that choppiness for the most part. Wednesday, see a nice drop, right? We take out the low of the week, which was so far had been on Monday, and quickly, right, rally from that. We get a consolidation. We're back at the weekly opening price. We trade here. This candle in particular. There was news that came out again on Thursday. Remember, I mentioned that a Dow Jones at 10 o'clock candle. There was news that came for the US dollar here. Consolidation, lower again on Friday. Consolidation. There was news here on Friday. So we get a nice huge wick here. Lower, does not take out the low that was created Wednesday. And then to end the week, we retrace off of that low. And so my outlook for gold, this is the only one I will have an outlook for. And so that's why this video is going to be relatively short. I will also, before I finish, go through NAS and SPX, but I do want to say this really quick. So I mentioned that this candle was news, right? And so this wick is something that doesn't surprise me, but it's also something that because I know there is news here and that news has a tendency to allow price to color outside the lines a little bit more and to try to induce people to chase it. So I'm going to kind of disregard that and what I'm about to mention now. And so notice how, like I said, it took out Monday's low. But prior to taking out Monday's low, this was Friday's low. So on Monday, we took out Friday's low. We retraced off of that. We did not make a new high. Tuesday again was just ultimately a consolidation. Wednesday, we run lower and we take out Monday's low and we make what in hindsight we see is the low of the week. So we've taken sell side, right? And then we retrace off of that, consolidate, and then above these highs as we go into Thursday is buy side. We take that out on Thursday. Well, Thursday in London. We retrace and we take out that high, also trading above the weekly opening, right? Pre-New York. Retrace off of that. In a New York session, we punch up and we take out this high, as well as we clear this high over here. So there's something called a three drives pattern, which is another concept I was introduced to by Inner Circle Trader. And essentially it's just the engineering of opposing liquidity, near or inside a pool of liquidity. And so what I mean by that is simply that, for example, above Monday's high, now that we looking back in hindsight, right? Above this high, this is a weekly high now. So I would assume that there's buy side liquidity up there, because there are people who are short from that high. And as it was doing all this dropping, right, they're gonna put their stop loss here, which basically just implies that there's liquidity resting above their orders that could be introduced into the market. And so the cool thing about this as well is if you go to my last video around the 20-minute mark, I am explaining this as well in the NASDAQ. And so you'll get a nice other example to kind of, look through on there. But so again, and that disregarding this week, because then this would be a fourth time, right? I've explained already once, twice, three times. So that three drives, right? Three drives into buy side. Now, the news again, we color outside the lines, we reject, we consolidate, and then we push lower to end the week. So what I have right here, which you should be able to see, this is what I would consider as a dealing range. And that essentially is just because of the fact that it took out sell side, right? And then there were buy side taken out three different times here. And the only reason, again, I'm just using this high is because it is technically the high, but I could also use this high. And so my outlook for gold for this upcoming week is to see price reach the equilibrium of this dealing range. Very simple, straightforward. It's not exactly giving an entry to that, but given where it's at right now on close, that's about 80 pips or so of a range. And outside of that, given all the news and things like that that are, about to be released in the coming weeks, as well as the dollar still being in that consolidation and me still anticipating lower prices forward, it should be fairly easy for gold to trade from where it closed at last week to equilibrium with its dealing range. Simple as that, right? And so now, before I go to the NAS and SPX charts, I do just want to mention that since I met my first mentor, I wanted to become one. I grew up without much guidance, and so I always felt that it put me at a disadvantage, but I wasn't going to let that stop me from pursuing greatness for myself and for those around me. And so moving forward, calling though my viewers believers, as well as just my motto, if you will, believed and achieve, BTA, right? That stems from that a lot, just because that's just a part of who I am. And so, I just want to be transparent and let you see a little bit more about who I am. And I also want to mention that losing is not an option, right? This mindset of losing is not an option is a great mentality for longevity, when you're pursuing a dream. But if you're in this business or you plan on being in it, please understand that everyone loses. And so there is no 100% win rate. What it really comes down to is how losses are handled and learned from. That's going to dictate the likelihood of becoming a consistent winner. And I also want to mention that the reason that I'm releasing this video before the market opens later today is because I will be participating in a live stream with a new community of traders with the same mentor around that time, around like the time that the market opens later this evening. And so I just want to, let you guys know why. And so going into NASDAQ and SPX on the hourly chart, cool thing is here, just like on Dow, let's go back to Dow real quick, right? So just like on Dow, we took out that Friday's high, and then eventually we got down to that Friday's low from the week before, right? And then, consolidated on there in the March high at the end of the week. Very similar delivery here with SPX, Tuesday high, took out Friday's high, a lot of back and forth volatility, seek and destroy characteristics, right? Before punching that Friday low on Thursday, and then one more time on Friday. Also that March high. So S&P and Dow, they're both kind of still within a range of that March high to continue to revisit that area. NASDAQ, on the other hand, that March high is still above us. Haven't been back to it in a while. The last time we were up there was actually the only time we traded there this month so far, and that was on Tuesday, April the 4th. Since then, we have not gone back up there yet. And so, very similar delivery here as well. Tuesday takes out that Friday's high, trade lower off of that. Thursday, we take out that Friday's low. And we do have other monthly levels though for NASDAQ, and that's the February high. So we ultimately are working at February high here, as well as the sell side from Friday, right? Just kind of utilizing those levels as places to revisit. I did also just take the time to identify this inefficiency here. As always, I'm always going to talk about them, and I'm loving how NASDAQ, this was news on Friday. This 9 o'clock candle at 9:45, there was news. So again, right, news will allow price to color outside the lines, but look at how quickly, right, we turn back around. So as far as just understanding what I just mentioned about everyone loses, let's say for example, I was to want to use this as a setup for a buy, right? Because I did say I was bullish, right? Let's say to end the week, I wanted to try to catch something to hold into this week, anticipating that, it will probably be the best entry to catch because if the market opens up with any type of a gap here and it eventually utilizes that gap to trade higher and it never comes back down here, then I used to beat myself up about things like that, saying, man, like, I wasn't able to catch the low. How was I going to be able to, catch those lows, right? And catch those highs. And so, first, it's not necessary. And second, losses happen, right? It's better to accept a small loss. For example, let's say I want to get in at the high end of this level and I want to use like the low end of it or some smaller time frame area within here as like my stop loss. It probably got hit considering, I mean, it's only about from the low about 20 points, not even. So probably would have still been valid, honestly, especially if I use this low here. But again, now we're talking about like theoretics and stuff like that. The main thing is just everything is not going to be perfect. Perfection is something that is not going to be discovered, especially not early on. I'd say I've seen some things that were definitely perfect as far as the delivery of price, but for the most part, especially this year, given all of the things I've been mentioning over and over and over again about the uncertainty and stuff like that, it just makes sense that perfection may not be something that's going to be present all the time, especially during news, right? Which is exactly what I said this was. So, there's that. And then the last thing that I want to say in closing is just one more thing, just to kind of, help you become more familiar with me, is that I haven't been much of a sleeper ever since I started dreaming. Jesus is my favorite superhero. There's no story that compares to what he did for other humans. And I don't believe it was ever told that he slept 6 to 8 hours a night to have the energy to complete his mission. And so I'm always told by people that, and not even, directly, right? But just in in reading, right? In my reading of things, that we need 6 to 8 hours of sleep a night. And, there are disadvantages to not getting that and all of that. But the truth is, like, sort of me taking something to allow me to be able to sleep, it's hard for me. It's like I got stuff to do, right? And so, correct me if I'm wrong though, without getting off topic about the it was never told that Jesus slept 6 to 8 hours a night. But with that being said, I'm gonna call it a morning and get on with my day. As always, I'd appreciate a like, a comment, or a new subscribe, and engagement is appreciated. But I'll holler at y'all later. Peace.